Hey everyone. If you feel like a large chunk of your income disappears before it even hits your bank account, you're not wrong. The truth is, taxes are one of the biggest advantages or disadvantages of where you live and how you plan your finances. Most people wait until April to think about the IRS. The wealthy treat taxes as a year round strategy. They strategically use deductions, time their income, and most importantly, understand how their physical address affects their net worth. In this video, I'm giving you the ultimate tax strategies that the average person misses, strategies that will instantly and legally lower your tax bill. Smash that like button, subscribe if you want to keep more of your paycheck, and let's dive into the money secrets they never taught you in school. Strategy one, mastering your tax bracket and planning. The first strategic move is understanding how your tax bracket works. The US uses a progressive tax system. This means your income is divided into tiers. Only the portion of your income that falls into a higher tier gets taxed at that higher rate. You are always better off earning more money. The real hack is using deductions and credits to manipulate your taxable income. Deductions reduce the total amount of income that is taxable. Think of things like contributions to retirement accounts or mortgage interest. Credits are even better. They are a direct dollar for dollar reduction of your final tax bill. The goal is to maximize these tools to keep you in the lowest possible tax bracket. Next, let's talk about year round planning. If you anticipate being in a lower tax bracket next year, you can use income deferral. For example, if you're expecting a big year end bonus, you might request that it be paid in January of the following year. This simple request shifts the entire tax liability to a lower tax period. Another strategy is maximizing deductions by bunching. If you bunch 2 years worth of charitable donations into a single tax year, you can exceed the standard deduction and maximize your itemized deductions. Finally, always check your filing status. Married couples should always check if filing jointly or separately is more beneficial depending on their income levels and deductions. Strategy two, the geographic tax traps. This is where location becomes your most powerful tax advantage, and many people overlook city income tax. Some cities impose an income tax on residents who live within the city limits. Here's the hack: if you move outside the city limits, you are not required to pay that city income tax. In a city like Cincinnati, Ohio, the rate is 1.8% on a $100,000 salary. That's $1,800 you keep in your pocket every single year. You must also consider school district income taxes. In some areas, school districts use income tax. Moving to a high quality school district that has a low income tax rate is a financial win win situation. Don't forget commuter taxes. If you live in one state but work in another, the state where you work will often tax your income. This is a layer of tax that must be calculated when you are deciding where to live. Finally, there is the state income tax versus property tax showdown. States with no income tax, like Texas or Florida, often make up the revenue by having higher property taxes. This is great for high income earners who don't want their paycheck sliced. Other states may have low property taxes but a high income tax rate. You must look at the total tax picture. For example, Connecticut has a high average property tax rate and a high income tax rate, hitting you from multiple directions. Strategy three, business, sales, and retirement tax planning. The tax code has specific areas for business owners and retirees. For business owners, the business income tax is critical. Choosing to operate in a state with a lower business income tax rate can be the difference between closing up shop or squeezing by in a crunch. It's common for businesses to incorporate in one state but operate in another to take advantage of favorable laws and regulations. For example, Delaware is popular for its business friendly laws. You also need to consider the sales tax. Some states have no sales tax, which can be a huge saving on large purchases like vehicles or appliances. Finally, the retirement and taxes rules. The location of your retirement can impact how your passive income from dividends and interest is taxed. Some states tax both dividends and interest income, while others only tax one or the other. This is crucial for anyone trying to achieve FIRE, financial independence, retire early. You now know that where you live and how you structure your finances can have a massive impact on how much money you get to keep from your paycheck and income. Don't let taxes be an overwhelming passive drain. Be proactive. Your immediate action step, go research the city income tax rate for your current address and the city right next to it. You might find your next $1,000 right there. Let me know in the comments. Which of these tax strategies are you implementing this week? Like this video, subscribe to join the community that's actually building real wealth, and hit that notification bell.